Welcome to PyUncut, where we break down the biggest trends shaping technology, business, and the future of work. Today, we're talking about something that is quietly transforming the global economy: massive tech layoffs, and the growing role of artificial intelligence behind them. In just the first quarter of 2026, the tech industry laid off nearly 80,000 employees worldwide. What's even more surprising is that almost half of these job cuts are being linked to artificial intelligence and automation. That's not just a statistic, that's a signal that the way companies operate, hire, and grow is changing faster than ever before. Let's take a step back and understand what's really happening. For years, tech companies were in a hiring boom. During the pandemic, digital demand exploded. Companies like Amazon, Meta, Microsoft, and many others hired aggressively to keep up. But now, that phase is over. Growth has slowed, costs are rising, and companies are under pressure to become more efficient. And that's where AI comes in. Artificial intelligence is not just another tool. It is becoming a replacement for certain types of work. Tasks like coding assistance, customer support, data processing, and even content generation can now be done faster and cheaper using AI systems. This is pushing companies to rethink their workforce. But here's where it gets interesting. While AI is being blamed for nearly half of the layoffs, experts say the reality is more complex. Some leaders argue that companies are using AI as a justification or even a cover for broader cost-cutting decisions. In other words, AI is part of the story, but not the whole story. So what are the real drivers behind these layoffs? First, cost optimization. Building AI infrastructure is extremely expensive. Companies are investing billions into data centers, chips, and AI models. To fund this, they are cutting costs elsewhere, mainly jobs. Second, productivity shifts. AI allows fewer employees to do more work. For example, a single engineer today, supported by AI tools, can do the work that previously required a team. This fundamentally changes hiring needs. Third, business restructuring. Companies are moving away from traditional roles and focusing more on AI-related functions like machine learning, data science, and automation engineering. And fourth, investor pressure. Investors want higher efficiency and better margins. Layoffs often lead to short-term stock gains, even if the long-term impact is uncertain. Now let's talk about the scale of this shift. In early 2026 alone, tens of thousands of jobs have already been cut across major companies. Some estimates suggest that over 45,000 layoffs happened globally within just the first few months, with a significant portion concentrated in the United States. And this trend is not slowing down. Prediction markets are already suggesting a high probability that total layoffs in 2026 could exceed previous years, which were already record-breaking. But what does this mean for workers? This is where things get serious. Studies show that workers who lose jobs due to technological shifts like AI often face long-term consequences. They may remain unemployed for longer periods, earn lower wages when they return to work, and experience slower career growth for years. Entry-level workers are especially vulnerable. Many of the tasks they traditionally perform, like data entry, basic coding, or administrative work, are exactly the kind of tasks AI can automate easily. However, it's not all negative. At the same time that companies are cutting jobs, they are also hiring in new areas. Roles related to AI development, cybersecurity, data engineering, and advanced analytics are seeing increased demand. In some cases, companies are even encouraging employees to upskill and transition into AI-focused roles instead of leaving entirely. This creates a paradox. Jobs are being destroyed and created at the same time, but not necessarily for the same people. And that's the real challenge. Now let's address a key question. Is AI really replacing humans, or are we just in a temporary adjustment phase? The answer is somewhere in between. AI today is powerful, but it is not perfect. It still struggles with context, accuracy, and complex decision-making. Many companies are discovering that fully replacing human workers is not as easy as it sounds. In fact, some experts believe the biggest gains from AI are still months or even years away. There's also growing skepticism about what some analysts call AI washing, where companies blame AI for layoffs even when the real reasons are economic or strategic. So instead of a complete replacement, what we are likely seeing is a transition toward a hybrid workforce. Humans and AI working together, with humans focusing on creativity, strategy, and oversight, while AI handles repetitive and data-heavy tasks. But this transition comes with risks. If too many jobs are eliminated too quickly, it can reduce consumer spending, slow down economic growth, and even create long-term instability in the labor market. Some economists warn that if AI displaces workers faster than new opportunities are created, the consequences could be severe. So what should individuals and professionals do in this environment? The most important takeaway is adaptability. The skills that are safe today may not be safe tomorrow, but the skills that complement AI, like critical thinking, problem-solving, communication, and creativity, are becoming more valuable than ever. Learning how to work with AI rather than compete against it is going to be the key to staying relevant. And for companies, the message is equally important. Cutting jobs may improve short-term efficiency, but long-term success will depend on how well they integrate AI with human talent. Companies that invest in upskilling their workforce and building human-AI collaboration models will have a major advantage. Let's wrap this up. The layoffs we are seeing in 2026 are not just about job cuts. They are about a fundamental shift in how work is done. AI is accelerating this shift, but it is not the only factor. Economic pressures, business strategy, and technological change are all playing a role. We are entering a new era of work, one where efficiency is driven by machines but value is still created by humans. The big question is not whether AI will replace jobs. The real question is, how fast can we adapt to the changes it brings? And that's something every worker, every company, and every investor needs to think about today. This is PyUncut. Stay informed, stay ahead.